It begins with a hotel key and a locked suitcase. July 1944, the Mount Washington Hotel in Bretton Woods, New Hampshire. Outside, the White Mountains are quiet. Inside, 730 delegates from 44 allied nations argue over the future of money. One briefcase belongs to a British economist with luminous eyes and a lifetime of brilliant speeches, John Maynard Keynes. Another sits with a stocky American official, blunt and relentless, Harry Dexter White. Both men know the same truth. Empires don't just run on armies, they run on payments. And by the end of this conference, one currency will get the right to write the bill. Britain arrives with poetry and debt. 2 world wars have wrecked the balance sheet. The pound sterling, once the world's backbone, is running on memory. The United States arrives with factories humming and vaults that glitter. Almost 2/3 of the world's official gold sits in Fort Knox and the New York Fed. The question on the table is simple and savage. Who will the world trust when the fighting stops? Keynes makes the elegant case for a neutral world money, a bancor, so no single country gets to run the table. White makes the practical case for the dollar, tied to gold, with everyone else tied to the dollar. Gold is scarce, the dollar is plentiful, and the war has turned American industry into a machine that can supply the planet. The delegates know which argument sings and which one pays the bill. On July 22, 1944, they sign the Articles of Agreement. The International Monetary Fund is born to keep exchange rates stable and help countries through short-term storms. The World Bank is born to rebuild shattered economies. And a new operating system takes over. Currencies fix their values to the dollar, and the dollar is convertible into gold at $35 an ounce. But only for governments and central banks. Pause here. That last clause matters. Your average person can't trade dollars for gold. Only official institutions can. It's a promise between nations, not a daily privilege. Still, it's a powerful promise. Peg your currency to the dollar, manage your trade, and if pressure builds, the IMF lends you time while you adjust. Markets get predictability. Governments get room to breathe. Commerce gets a common language again. For 20 years, it works better than anyone dared hope. Europe rebuilds under the Marshall Plan. Japan industrializes at speed. World trade explodes. With fixed exchange rates and capital controls, countries can focus on jobs and production instead of defending their currency every Tuesday. The dollar, liquid and accepted everywhere, becomes the pipe that carries global payments. Tankers, telephones, and the dollar, 3 networks that knit the planet back together. But every operating system carries its own bug. The Bretton Woods bug has a name now, the Triffin Dilemma. To supply the world with dollars, America must run deficits. Send more dollars out than it pulls back. But the more dollars that accumulate overseas, the more people ask whether the U.S. still has the gold to back them at $35. Provide liquidity, lose credibility, keep credibility, starve liquidity. That isn't a slogan, it's arithmetic. By the early 1960s, the arithmetic bites. European central banks accumulate dollars and quietly test the promise. The U.S. opens a gold pool with allies to defend the $35 peg in London. Meanwhile, a new river appears, the eurodollar market. Dollars held in banks outside America, beyond the Fed's direct reach, multiplying the system's plumbing without increasing its gold. Then come the bills, Vietnam War spending, Great Society programs, and a domestic economy running hot. Dollars keep flowing out. Gold keeps looking smaller. The tension breaks, as these things do, on a weekend. August 15, 1971. President Richard Nixon goes on television and announces that the U.S. will suspend the dollar's convertibility into gold. The Nixon shock closes the gold window. The original Bretton Woods promise, dollar equals $35 in gold for central banks, dies in a paragraph. For a brief moment, the world stares into a vacuum. If the dollar isn't convertible, what keeps everyone using it? Here's the twist most people miss. Bretton Woods didn't end because the world lost faith in the dollar. It ended because everyone used the dollar so much that the gold promise became mathematically impossible to keep. The system succeeded into contradiction. And then it adapted. Within a few years, the dollar finds a new anchor, oil. In 1973 to 1975, amid OPEC's oil shocks and a rewired Middle East, the U.S. strikes understandings that oil will be priced and settled in dollars, with dollar surpluses recycled into U.S. assets. If you need energy, you need dollars. If you sell energy, you hold and invest dollars. The formal gold peg is gone, but a petrodollar architecture quietly replaces it. A currency backed not by metal, but by network effects, depth of markets, and strategic arrangements. Bonds replace bullion as the world's reserve asset. The king keeps the crown not by decree, but by usefulness. Go back to the hotel for a minute. Imagine telling Keynes and White that in 50 years, central banks would hold more U.S. treasuries than gold, that exchange rates would float, that capital would sprint around the world in milliseconds, and that the dollar would still sit at the center. They would blink and then nod. Because Bretton Woods wasn't only a contract, it was a lesson. People want an operating system for money, not just a metal to weigh. They want stability, liquidity, and a court to settle disputes. In 1944, that court was the IMF. Today, it's a blend of central banks, swap lines, and deep bond markets that let you park $1 trillion without breaking the furniture. Was it perfect? No. Fixed rates discipline inflation until they discipline growth. Capital controls buy stability until they choke investment. After 1971, floating rates buy flexibility until volatility taxes trade. Every regime asked you to pay somewhere. Bretton Woods asked for obedience to $35. The post-Bretton world asks for faith in institutions and the rule of law. Different bill, same question. Who do you trust with time? Here's where the story touches the present. Whenever you hear debates about de-dollarization, you're hearing echoes of Bretton Woods. Can the world run on multiple reserve currencies? Could a neutral asset like Keynes's Bancor or a digital basket replace a single king? Maybe one day. But reserve currency status isn't a medal you pin on a chest. It's a job description. You must provide deep markets, legal predictability, lender of last resort muscle, and the political willingness to run deficits so others can hold your liabilities. It's expensive power. What should you take from the day the dollar became king? First, that monetary systems are designed, born in rooms with clocks and coffee, not just in minds and myths. Second, that credibility beats ideology. The dollar won because it solved problems. Post-war reconstruction, stable prices, simple settlement. Third, that every solution carries the seed of its replacement. Bretton Woods solved scarcity with pegs and gold. Success created too many dollars to keep the promise. The petrodollar era solved convertibility with utility. Now the question is whether the same networks, trade, energy, finance, keep favoring the dollar as the world becomes more multipolar. Bring the story down to a kitchen table. A factory owner in Milan orders machine parts from Ohio and pays in dollars because the invoice terms are clean, the hedges are available, and the bank knows the paperwork. A student loan in Sao Paulo ultimately references dollar funding costs because the global bond market sets the rhythm. A central banker in Jakarta watches U.S. yields because they tug on local mortgage rates. None of these actors care about gold at $35. They care that the pipes work when they turn the faucet. And that's the real legacy of Bretton Woods. It taught the world to think of money as infrastructure, rails, not relics. Rails can be rebuilt, extended, rerouted. But you switch tracks only when the new line runs faster, safer, and cheaper. Until then, the trains keep running where the stations already are. Picture the final scene. The conference has ended, the signatures dry, the delegates drift onto buses. A hotel maid finds a napkin in an empty ballroom. Someone has sketched a triangle labeled Gold Dollar World. It isn't art. It's a map. For a generation, that map will guide how salaries get paid, how ships get insured, how debts get settled. When the triangle changes, the shape on the napkin does too. But the need for a map doesn't. Bretton Woods didn't just crown a currency, it crowned a principle. Money rules best when it rules through trust, not over it. The dollar became king because it carried more than a symbol, it carried a system. And the lesson for us, business owners, savers, students, policymakers, isn't to worship the crown or root for its fall. It's to understand the plumbing well enough to see change coming, to know which promises matter, and to keep your own finances aligned with the world as it is, not as you wish it to be. If this gave you a clearer way to see how we got here and what might come next, stay with Money Lore. We'll keep translating the architecture of money into plain English so you can navigate a world built on systems, not slogans, and make good choices the day the map shifts again.